Hi students, welcome to the class. In previous class we have already discussed about trading account, which was the first part of income statement or trading and profit and loss account. In this class we will discuss about the second part of income statement, that is profit and loss account. And this profit and loss account is the account which is prepared to know the overall result of the business concern. That means the result of all the operations undertaken throughout the year. In trading account, what happens? You are getting the result of trading only. That means buying and selling of goods. But in case of profit and loss account, it is the result of all the operations undertaken throughout the year. So it tells about net profit or net loss, net profit earned or net loss suffered at the end of the year, accounting year. So before preparing profit and loss account, you have to go through another term, that is indirect expenses. We have already discussed about direct expenses while preparing trading account, because only direct expenses are considered while preparing trading account. But while preparing profit and loss account, you must know about indirect expenses, because you will put all the indirect expenses on the debit side, because it is the expenses side. So what is indirect expenses? Direct expenses, the expenses which were related to either purchase or production of goods. But indirect expenses are the expenses which are not direct. That means indirect expenses are the expenses which are not related to either production or purchase of goods, which are not related to your trading. That means buying only, not selling. So you can say indirect expenses may be of two kinds. They may be operating and non-operating. Again, what is operating and non-operating? Indirect expenses, out of indirect expenses, some expenses are operating, which expenses, the expenses which are related to your business operation, they are called operating. And the expenses which are not related to your business operation, that is non-operating. So indirect expenses may be operating or non-operating. So whatever it may be, all the indirect expenses will be shown on the debit side of profit and loss account. That may be operating or non-operating. Let us have an example of operating and non-operating to understand it properly. See, carriage outward. Carriage is the expenditure. It is paid on carriage at the time of sale of goods. As it is related to your business operation, it is operating. But remember, interest paid. Why you are paying interest? Because you have taken a loan or you have taken credit facilities. That is why now you are paying interest. So you have taken a loan, that is not your business operation. That is why it is a non-operating expense. So some are operating and some are not non-operating. Salary, you are paying to the employees who are working in office for you. They are related to your business. That is why it is operating. But interest paid, see, you are, whatever the interest you are paying for the loan taken by you. It is not operating. It is non-operating expense. So whether operating or non-operating, all the expenses you can see on the debit side. First of all, remember, trading account was closed by gross profit carried down and gross loss carried down. On the debit side, trading account, in trading account, gross profit was on the debit side. It has been carried down on the debit side. Again, it will be brought down to the credit side of the profit and loss account. And gross loss was carried down in trading account on the credit side, it will be brought down to the debit side of the profit and loss account. So it will start with either gross loss brought down, it will be on debit side, and if there was gross profit in trading account, it will be brought down on credit side. So it will start with either gross profit or gross loss. All the indirect expenses will be put on the debit side, and all the incomes, because only one operating income is there which was put in trading account on the credit side, that was sales. Your business operation is related with sales. Selling goods is your business operation. So whatever the income that comes from sale of goods, that is operating income. You have shown it on the credit side of trading account. Except that all other incomes are non-operating. They will be shown on the income side or credit side of profit and loss account. Profit and loss account credit side shows all the incomes by interest received, by commission received, and all other incomes. It is interest paid, it is commission paid. These are expenses and these are incomes. So when you will put all the incomes on credit side and you will put all the expenses on the debit side, the total of credit side will be compared with the total of debit side. If credit side exceeds the total of debit sides, then that is the net profit. And if debit side exceeds the credit side, the balance is net loss. So whether net profit or net loss, that belongs to the owner, and that will be transferred to the capital account of the owner. So remember, these are the indirect expenses and all other incomes are there. They may be operating or non-operating. These are non-operating incomes. These are operating or non-operating expenses. So when you will compare, you will get either net profit or net loss. Okay, thank you. And in the next class, I will come with an illustration of profit and loss account. So I believe that you will understand all this, and we will meet in the next class with an illustration of profit and loss account. Until then, you cover this. Okay, thank you.